Consistency of time frame, consistency of indicators, a consistent approach in analysis is an essential prerequisite in order to ensure survival in the market. If you survive for long enough in the market, you will learn the necessary tools required to potentially even do well in the market. In the videos that we have discussed so far, we have kept a few things constant. We have kept the index constantly selected at the 60-minute time frame, and we have used certain indicators constantly, such as ADX, the 2050 moving average, ATR, and in the event a trader wishes to do multi time frame trading, then we have included the RSI indicator on the smaller time frame. The chart in front of us is once again of the Nifty 50 on the hourly time frame, and the blue lines drawn here are the ones that we had maintained in our video since day before yesterday, wherein in these blue lines we determined that the market is trading in a range and the optimal trading strategy for a range is to write the call and the put option on the extreme sides. We used our assessment to determine that approximately 22,600 would be a resistance for Nifty and 22,300 will be a support for Nifty. Therefore, the objective or the plan for the day is to write 22,600 call and the 22,300 put. This is something that we have discussed in, I think, the last two videos. And the reason for this was also quite simple. First of all, we had a 2050 moving average which indicated a slight long bias, but the ADX was significantly below 25, hinting at a range. And once we identified that it is a range, we knew that we have to write the options. So we only worked to determine the highs and lows of the range to determine the strike price of the options that we were going to write. In the event the market is highly volatile, the range will be very wide. And if the market is contracting, then the ranges will be very narrow, such as here we have a 300 point range on the Nifty. Since the start of the series, we had been bearish on the market. Over the last few days, we changed our opinion to bullish. Then once again, we have come back to a range. And we should always remember, the ranges tend to resolve in the direction of the previous move. For example, we can see that from the 4th all the way to the 10th, this is 1 week price action, which you can see the cursor. The previous move was upwards, after which the market has come in a range. And generally, ranges resolve in the direction of the previous move. So it is possible that the market could indefinitely range, that is, stay in these 300 point threshold for a long time. But as we approach onto a long weekend, that is because of Holi, I think we should have Friday and then Saturday, Sunday off. So it is possible now that the market could look towards resolving the range, particularly if some geopolitical news happens in these 3 days. Then the bet in such a direction would be in the direction of the previous move. Anyways, predicting where the range is going to head is not really in our scope also, as we had discussed, because the time frame that we have selected is the hourly, and we have already discussed that all assessments made on the hourly chart are only applicable for one day, that is the next trade session. We are almost approaching the close of today's trade session. You can see that the market opened up in green. We had a plan yesterday and that at 22,450, which would be the midpoint of the range, a trader who's using a single time frame could blindly execute writing the 22,600 call and the 22,300 put. Yesterday, this trader, because the market closed right in between the range, would have profited from both these options. Today, the trader would profit from the call option but not as much from the put option and make a mild loss possibly in today's trade. And we have also mentioned that I personally do not trade that market in which the ADX starts dipping below 25 for short-term trading purpose. So let us just continue with our assessment today. The same process, same indicators. I have now once again selected the 2050 moving average. you will note that there is another crossover here, hinting at a potential range. Remember that whenever there is just a crossover, there is complete loss of trend. When the crossover extends in a single direction for a significant time, that is when we can start betting that there is a trend in a particular direction. At this point, a crossover is only indicating a complete loss of trend. We will select ADX as an indicator and see that the value is at 11. We have already set up our rules in the past that if ADX is below 25, the market is not trending. If the ADX is between 20 to 25, we will simply not trade it. If ADX is below 20, then only those traders who trade ranging markets should trade it. And those traders who trade ranging markets should generally try to write the option. If you're writing the option, then one should avoid carrying forward that particular position. And whenever we are writing the option, we have to only focus on the extreme points of the range and sell the option when the spot reaches the midpoint of the range, which it reached today, as we can see in this candle at around 11:30 in the morning. The spot comfortably breached the 22,450 mark, triggering both the call and the put option sell. We are a few minutes away from close, and such a trader would hope that there is a mild increase in the price towards 22,450, because at this point the trader would completely be in profits. Even now, at nearly 22,400, the trader could be in profits, but if it closes towards the low of the day or maybe closer to 22,330, then such a trader might have a losing day at the end. But the loss would be very, very insignificant. It will not be very high, which is the nature of the trade. So again, when we look at the market today, we can see there is no change in the extreme points. The market is in a perfect range, and therefore this same trade plan of writing 22,600 and 22,300 put will be in play even for the Monday trade session. And if the market gaps up above our levels, then obviously there is no question of taking a trade. And once again, the trade will only be executed once the market is comfortably at 22,450 levels. For example, right now the market is at 22,410. Assuming it closes here in its entirety, then we will have to wait for a 40-point up move on Monday in order to execute the trade. But if the market opens up, say, 90 points above the 450 level, then again we cannot take the trade and we will have to wait for the move coming down. Because such is the nature of the range, that we have to sell at the midpoint of the range in order to keep both our boundary positions safe. So with that, I think I will end this video. Just to wrap it up, we saw the 2050 moving crossover with the crossover here and the ADX here. And since you all know that generally I do not trade ranges, therefore I am not even going to apply the average to range indicator on the screen, because based on this price action, if I were day trading as I used to in 2016, 17, 18, I would not approach the market for a trade on Monday and would continue my search on other stocks or indexes in order to find a more favorable chart structure for a potential trade. With that, I wish you and your family a happy Holi and best wishes for the next week's trading session. Thank you.